Yo, what is going on, everyone? Welcome back to another video. And in today's video, we're going to be going over when you should enter a setup, when you should be exiting the setup, when to take your profits, and overall, when to recognize a good opportunity to go inside a play. So let's go ahead and look at a stock. Let's look at Amazon. So we're going to go to full feature. Here we go. So first off, the first step is to recognize a trend. So here we're going to look at Amazon, and we see that Amazon's previous high here can be correlated to the past to this level. So if I can go here and I put the previous highest level that Amazon had trouble breaking, and then I'm going to go back over here. And I'm going to do the same thing. I'm going to graph the previous highs where Amazon had trouble breaking. So all these levels are levels where the stock was stopped or the stock reversed. So all these levels are potential places where we can take our profits, because those are potential places where the stock can reverse on us. So now that we have all of that, this morning actually I called a play on Amazon that did fairly well. I actually did 50% in about 5 minutes, and then I left two runners, and those runners actually ended up coming back down, but they ended up finishing at 20%. So overall, it was a good play on Amazon. So here we're going to be looking at the trend, and here we see that Amazon opened, and of course I always tell you guys, never trade the first 15 minutes. Always let the market choose a direction. But here we see that Amazon opens up in the green, and we see there's a lot of bullishness in this stock. We see there's a lot of bullishness in this stock. We see it rising, and in the first 15 minutes we see that it already broke a previous high with volume. Now, we also had an AI signal that was called out. So if I go on Discord, I go down to AI signals, I can see that the AI signal for Amazon was called out at 6:39 a.m. Now, AI signals should be used as day trades if you guys use them, but it just depends on your personal preference and how you trade. So let's look at Amazon. Boom. So we have the long AI signal, we have the date, the reference point, and we see long is a call. And if say it says short, that would be a put. But so in this instance, it's a long. So we're going to go to Amazon around this time here. And here we see a huge volume, but this is only 10 minutes in. So I will never trade the first 15 minutes, no matter how lucrative it looks, no matter what, I will not trade the first 15 minutes. But I did wait another 5 minutes. And in these 5 minutes, I saw that Amazon broke the previous high right here. That correlates all the way to the past performance. I realized that it broke with volume, so we can see here a break with volume. We see this volume spike, and then we see the break here. Now, I don't want to confuse you guys too much, so I'm going to zoom out a little bit. And now let me get this again. And we see this huge volume spike. Because I know there's a lot of lines and stuff, and it might look a little bit confusing. You guys get used to it. The more time, the more experience you guys get with these charts, you will get more used to it and more comfortable. Break with volume right here. We see this candle break the previous high. So this is a direct indication to me to go in Amazon, okay? So at this point, I was thinking, okay, it broke with volume, there's a volume spike, and there's a lot of bullishness. And at this point, SPY was coming up as well. Now, another thing, quick thing, I don't want to confuse you guys too much, but another quick thing is whenever you are trading Amazon, Facebook, Roku, stuff like that, you should always have that S&P 500 app. You should always have the SPY out, because SPY is going to correlate to those stocks exactly. 9:35. We see it right here. So about 9:40, 15 minutes into the stock market opening. Boom. We see it here. 9:40, right here. So we see that SPY was coming up as well. Now let me circle it for you guys. So I was watching SPY, and I was also watching Amazon, and we see that SPY was coming up. At this point, it was coming up. And at this point, so with Amazon, that was the same. That was at the exact same time. So I knew that it was safe to go in with this in accordance with the SPY. So now I see a break with volume. So boom, we go in, and the way I would know to take my profits is by looking at previous resistance levels. So for instance, here, R5. If I delete all these lines, here R5 is a good place to take profits because that's a previous high. Let me remove all of this. So R5 is a good time to take profits because that's a previous high. So at this point, it breaks again. It breaks this one with volume. So at this point, Amazon, if Amazon follows its technicals, Amazon was supposed to be in this area over here. But it did not follow its technicals at this instance because of course it's following SPY, and SPY just fucking crashed right here. But we were able to catch this good profit up here, and this was about 50%. This whole candle here was about 50%. And so I took I bought 5 contracts, I took 3 here, and then I let 2 run, and then I took the other 2 here, and this was about 20%. And we were actually out. And what happened next? Amazon came back down, but we saw that ended up coming back up throughout the day. But we did take our profits at this area. This was a quick scalp, quick entry. And to go back and answer the question of how do you know when to get in? Is basically you see a spike in volume, break a previous high, and you see the candle completely filled or at least 95% filled, and you see it break the previous high of course with the volume. And Amazon has to follow its technicals, and SPY was coming up as well at this level. And the fact that it rejected made it so that Amazon came back down too. But in a different universe, wherever and where Amazon did follow its technicals, Amazon would be around this area because it would be in the previous highs because it once again it broke with volume. But in this instance, it did not follow its technicals because, of course, SPY reversed. So let's go ahead and look at a different stock. Let's look at Facebook. So I have it all charted out. So basically, let's look at here. This is a good example here. So here, the first thing I said was a break with volume. Now we do not see a break with volume here. However, we do see a break. Now this is a good example of when you should enter because we do see 2 candles hold up. We see a break, we see the initial break here. There is low volume, but we do see a break. So at this point it would catch my eye. But the only way I would enter is if I saw that it held above that level. So for instance here it held above 262.54, held above for 10 minutes. So boom, 5 minutes each candle, 10 minutes. So at this point I would enter. And what happens next? Boom, it comes back up. It comes all the way up. But the main point is that it broke and it held. So either wait for a break with volume or wait for a break and hold. And of course you should wait about 5 to 10 minutes on the hold. 15 if possible. Let's look at Zoom. So let's get a good look at Zoom here. We actually ended up catching Zoom yesterday. It was very lucrative. But let's look at it again. So let's look at it in this level because this is around where we caught it. It actually ended up doing very, very well. So here we go. We see that we have a break here, 5, 10, 15 minutes, the first 15 minutes. We did not catch it here, but we did see it consolidate. And at this point, the same thing. We're going to wait for a break and a hold. Now, what is the previous high here? The previous high is 259.71. So we're going to wait for a break. So here we do not have a break. We have a rejection because it didn't even go on top of it. So we have a rejection, but then we have a break here. And what do we wait for next? We wait for it to hold above. So we wait for it to hold above. This holds above, holds above, holds above. So now we know that it's time for calls because it broke the trend, consolidated, broke a trend, and now it held above. So at this point is where you should be entering, and of course we were able to take all this profit. Boom, we were able to ride this all out. So to summarize everything, you know when to enter day trades, because every single play is different, but you would know when to enter day trades based on the volume and break above the previous high. If you would be going for puts, it would be the same exact thing, but on the downside. So you would be looking at red volume to spike and a break. But the main concept is that we're waiting for a break with volume or just a break and hold. And after that, we are ready to go. And of course, always be watching the S&P 500, be watching the SPY, and making sure that the SPY will not reverse on you. Because if we were still in Amazon, we would know to get out. Because now we know that Amazon's going to come back down too, because Amazon follows the SPY. So a great example here. So the crazy red spike. So SPY came down first, boom, and then we'll follow it, Amazon, boom. So of course, always have the S&P 500 out whenever you're trading stocks like Facebook, Amazon, Apple, any of those the large stocks, big name stocks, always have the SPY out. Okay, guys, that's gonna summarize everything. Have a great rest of your night, and take care. See you guys later.